I like to say it's a hurricane over real estate right now. We're in the Category 5 hurricane, and it's sort of a black cloud hovering over the entire industry until we get some relief or some understanding of what the Fed's going to do over the longer term.
Recent surges in real estate prices have left many wondering, are we on the brink of another property market crash? One of the industry's most respected real estate moguls has now come forward with a serious warning that all potential buyers, sellers, and investors need to hear. Is your investment safe, or are you about to face the biggest financial loss of your life? According to real estate mogul Barry Sternlicht, a storm is brewing for the real estate industry, and a recession is imminent despite rising promises of a gentle landing. In an interview with Bloomberg Wealth, the CEO of Starwood Capital criticized the Federal Reserve's rapid monetary tightening. Moreover, he cautioned that the economy will feel the effects of central bankers' aggressive pace of tightening, and, as a result, the interest rates will rise by 425 basis points to combat inflation. He said that the real estate industry, in particular, will be facing difficulties due to rising rates and tighter financing conditions. Around $1.5 trillion of commercial real estate debt is about to mature over the next 3 years, and if the rates stay high and property values decline, this might result in a wave of problems. Sternlicht said, "I like to remark that there is currently a hurricane over real estate." In an interview with David Rubenstein, Sternlicht stated, "We're in a Category 5 hurricane, and it's a sort of blackout looming over the entire business until we receive some reprieve or some knowledge over what the Fed's going to do over the longer term." Moreover, he believes that a recession is imminent. There is an optimism that the Fed can prevent one. He continued, "There will be a significant contradiction of credit. Any asset class in the nation has not yet experienced an adjustment to that cost of capital. But it will happen. The economy will weaken, according to Sternlicht. We can see that weakened economy optimism already makes this apparent. Hence, in the second quarter, the CEO Confidence Index moved down 1 point to 42. According to data from the Conference Board, the Consumer Confidence Index increased to 110 in July, but is still below pre-pandemic levels of about 130. Moreover, the fact that unemployment is still low is largely a result of Biden's $1 trillion infrastructure plan and the fact that the services sector in the economy is still strong, according to Sternlicht. He said, "It feels like the last gasp before you settle into what should be and what you'd expect to be. I hope it's a shallow recession." Recently, other Wall Street commenters have been happier, since markets anticipate that the Fed will raise rates only one more time this year, increasing the likelihood that the economy won't enter a recession. Addition, there has been talk of a Goldilocks scenario in which the Fed may cut prices without stifling demand or lowering growth even though labor markets are still hot. So, what exactly is this Goldilocks scenario? There are rumors that the concept has some relation with gold, but the truth is something else. Well, let's see. A Goldilocks economy refers to the optimal condition of an economic system. According to the concept, the economy is stable and growing steadily with full employment. Additionally, neither the economy is growing nor shrinking significantly. Thus, a Goldilocks economy has continuous economic development that is just heated enough to stave off a recession, but not too hot to cause inflation. What are the components of a Goldilocks scenario? Do you have any ideas? Let's unveil. Even while economists disagree on the precise definition of a Goldilocks economy, it's generally agreed that there should be a balance between growth, employment, and inflation. The economy may enter a recession if GDP growth is sufficiently low. Economists define a recession as 2 consecutive quarters or 6 months with negative GDP growth. Meanwhile, inflation or rise in prices in the economy may result from overly rapid GDP growth. For an ice cream to maintain its structure and consistency, several ingredients should be present properly. Moreover, a cool temperature should be maintained. Similarly, how can a Goldilocks economy be maintained? Is it as simple as it sounds? A Goldilocks economy can be developed and managed with Congress's aid of fiscal spending. Governments can increase spending through infrastructure initiatives like building new roads and bridges and contracting with private businesses. Additionally, taxes are another instrument used to govern an economy. While consumer tax cuts boost consumer spending, tax reductions for corporations encourage business investment. However, fiscal spending and tax reductions can have contradictory consequences and are rarely a long-term answer to maintaining the Goldilocks economy. Market participants thought that the economy in 2017 was an example of a Goldilocks economy. Employment was between 3 and 4%, the economy was growing at a rate close to 4%, and there was no sign of real inflation. Later that year, the Fed raised interest rates to maintain modest growth and inflation. At that period, the average annual GDP growth for the world's economy was over 3%. Barry Stewart Sternlicht, an American millionaire and co-founder of Starwood Capital Group, a management company with over $60 billion in assets under administration, was born on November 27, 1960. He serves as a Starwood Property Trust chairman and Starwood CEO from 1995 to 2005, and is one of the company's co-founders. His projected net worth in May 2023 was $4.6 billion. Recently, he discussed the state of the US economy in an interview. Sternlicht reaffirmed that the Federal Reserve should have paused rising interest rates, citing the banking crisis after the Fed raised rates by 25 basis points in March 2023. Numerous significant banks failed recently, notably Silicon Valley Bank and Signature Bank. He said that, "I believe rates ought to be reduced. That's how banks are recapitalized. I believe they've accomplished enough. What will happen is predicted by the bond market, and they're accurate." He said interest rates must be reduced as the economy is about to collapse. The banking sector is still under pressure, according to billionaire Barry Sternlicht, and the economy is destined for a crash landing rather than a rough one. The Fed's unprecedented interest rate hike in reaction to strong inflation puts the banks under strain. The Fed is increasing pressure on a system already beset by insolvent regional banks by hiking rates once again this week, Sternlicht said on CNBC's Squawk Box.
This is an economic recession like no other. Well, nobody's ever seen anything like this. This doesn't make any sense what's happening.
Moreover, he added, "You don't have to see the car hit the wall to know it's going 8,000 miles per hour and it will hit the wall." Additionally, he noted that the Fed was killing a small fly with a steamroller. There is good inflation and bad inflation, according to the CEO of Starwood Capital, and wage inflation is positive inflation. He asserts that capitalism is supposed to function in an economy with rising wages. He stated, "We can cope if I have to rise prices if I can't get someone to clean the hotel rooms, and I have to pay them $25 instead of $15. That's how the country creates money, according to Sternlicht." But he said that the Fed wants to prevent it and is prepared to destroy the labor market. When considering their held-to-maturity books, Sternlicht told CNBC that he had examined 6 regional banks and discovered that they were all technically insolvent. He said, "We had a handful of them that was like negative $50 per share, but I won't say which one because you've discussed it a lot." According to Sternlicht, the Fed behaves like a neutron bomb because you move rates so quickly and far, causing collateral harm. Hence, he added, everything in his path will be blooded and dead while he is standing. A recession that could potentially cost millions of Americans their jobs is approaching the United States. Sternlicht said, "You're going to experience a recession in the 3rd or 4th quarter, and the customer has run out of money." He added his rates of savings are now at an all-time low. Sternlicht, who purportedly has a net worth of $4 billion, said on CNBC that the man was in debt. However, Sternlicht anticipates that inflation will turn negative before the recession begins in the second part of the year, so not all is lost for the United States in 2023. He said, "One thing about inflation is that it's not entirely fixed." He continues, "As the supply chain stabilizes, inflation will decline. By the end of the year, he anticipates inflation to fall to 2%, indicating success for the Federal Reserve's plan of swift interest rate rises." So, what do you think? Is there a probability of a recession in 2023? If so, what measures will you adopt to overcome the situation? Please share your thoughts in the comments. This is not just any warning, but one from a real estate mogul who's been through the thick and thin of the market. While we've seen ups and downs in the real estate industry, warnings like these are rare and can be pivotal. Remember, if you found value in this video, hit on that like button and share your thoughts on this topic in the comments below. What do you think about this warning? Do you believe we're on the brink of a major shift? And if you haven't already, subscribe to our channel for more insightful content like this. Stay informed and stay ahead.